Hello, everyone. Welcome to the market opening bell on Monday, October 27th, your 10-minute guide to the stock market. The market is anticipating the upcoming Trump-Xi summit will ease trade tensions, driving Hong Kong stocks higher. On Friday, the Hang Seng Index opened 209 points up, climbed as much as 271 points to an intraday high of 26,239 and closed the day with a gain of 192 points or 0.7% at 26,160. The HSCEI index rose 63 points or also up 0.7% to finish at 9,363, while the Hang Seng Tech Index advanced 108 points or 1.8% to 6,059. Total market turnover reached 226.6 billion Hong Kong dollars. For the week, the Hang Seng Index surged 913 points, a rise of 3.6%. The Share Index gained 3.9% and the Tech Index rebounded 5.2%. All three major indexes ended the two-week losing streaks. Southbound stock next saw a net inflow of 3.414 billion Hong Kong dollars into Hong Kong stocks. Notable net purchases included Meituan with 654 million Hong Kong dollars, SMIC with 601 million, CNOOC with 570 million, Tencent with 375 million, Xiaomi with 298 million, and Alibaba with 170 million. On the selling side, PopMart saw a net outflow of 628 million, followed by Sino Biopharm Farm with 246 million, UBTech with 211 million, ZTE with 129 million, and Li Auto with 113 million. Southbound funds have now bought SMIC for 4 consecutive days, totaling $1.797 billion. Tencent for 3 straight days, totaling 949 million, and CNOOC for 3 days, totaling 2.975 billion. From a technical perspective, the Hang Seng Index is consolidating around the 26,000 level, but remains capped by resistance at the 20-day moving average of 26,276. Whether the index can hold above 26,000 or break through this resistance will depend heavily on positive developments from the Trump-Xi meeting. A sustained move above the 20-day moving average could open the way to targets of 26,550 or even 26,950. Conversely, if the summit disappoints and the index falls below 26,000, initial support lies at 25,600. On the mainland, the three major A-share indexes opened between 0.2% and 0.8% higher on Friday and extended gains throughout the day, closing up 0.7% to 3.6%. The Shanghai Composite rose 27 points or 0.7% to 3,950, marking a 10-year high. The Shenzhen Component Index gained 263 points or 2% to close at 13,289, while the ChiNext Index jumped 109 points or 3.6% to 3,171. Combined turnover on the Shanghai and Shenzhen exchanges reached 1.9784 trillion yuan. For the week, the Shanghai Composite rose 2.9%, the Shenzhen Component gained 4.7%, and the ChiNext surged over 8%. The renminbi central parity rate was adjusted down by 10 pips to 7.0928 against the US dollar. In Hong Kong, chip stocks were in strong demand. Reports emerged that Peking University had successfully developed high-precision chips, while mainland China continues to strengthen its top-level design and systematic deployment for the 15th five-year plan in artificial intelligence, with a focus on developing new model algorithms and high-end computing chips. SMIC rose 8% and Hua Hong Semiconductor surged 13.7%. On the Asian market, Cambrican also climbed over 9%, reclaiming the 1,500 level and closed at 1,525 yuan. On the earning front, China's Shenhua Energy released its first three quarters results for the period ending September. Revenue fell 16.6% 8% year-on-year to 213.151 billion yuan, primarily due to an 8.4% drop in coal sales volume to 370 million tons and a 13.7% decline in average selling price to 487 yuan per ton. Coal segment revenue dropped 21.1% to 159.1 billion yuan. However, the power segment was a bright spot, despite lower electricity sales volume and pricing leading to reduced revenue. Costs fell more sharply than revenue, resulting in higher gross profit and gross margin, reflecting the efficient operations and progress in green transformation. Net profit for the first three quarters was 41.366 billion yuan, down 13.8%, with earnings per share at 2.082 yuan. Overall gross margin was 25.2%, down just 0.4 percentage points, showing effective cost control and relative resilience in a down cycle for coal. For the third quarter alone, revenue was 75.042 billion yuan, down 13.1%, with net profit of 14.66 billion yuan, down 11.8%, and earnings per share of 0.738 yuan. Wuxi AppTec reported that first three quarters revenue of 32.857 billion yuan, up 18.6% year-on-year. Net profit attributable to shareholders soared 84.8% to 12.076 billion yuan, driven by its focus on strengthening the CRDMO business model, sustained revenue growth, improved capacity efficiency from late-stage and commercial projects, and gains from the sale of an associate. Earnings per share were 4.25 yuan. For the third quarter alone, revenue was 12.057 billion yuan, up 15.3%, with net profit of 3.515 billion yuan, up 53.3%, and earnings per share of 1.24 yuan. The company raised its full-year guidance, expecting sustained business revenue growth of 17 to 18%, up from the prior 13% to 17%, and total revenue now projected at 43.5 billion to 44 billion yuan, revised from 42.5 to 43.5 billion yuan. As of September, in-hand orders for continuing operations stood at 59.88 billion yuan, up 41.2%. Li Ning announced that for the third quarter ended September 30, 2025, retail flow on the Li Ning platform, excluding Li Ning Young, recorded a mid-single-digit year-on-year decline. By channel, offline saw a high single-digit drop, with direct retail down mid-single digits and wholesale down high single digits. E-commerce virtual stores, however, achieved high single-digit growth. The third quarter was mainly impacted by weak macro consumption and pressure on offline channels, though e-commerce grew strongly against the trend. As of September 30, 2025, Li Ning had 6,132 sales points in China, excluding Li Ning Young, a net increase of 15 year-to-date. Retail operations saw a net reduction of 46 points, while wholesale had added a net 61. Li Ning Young had 1,480 sales points, up 12 net year-to-date. In the U.S., September inflation came in below expectations, boosting rate cut hopes and lifting stocks on Friday. The VIX fear gauge fell 0.93 points or 5.4% to 16.37. The Dow Jones surged as much as 592 points or 1.3% and closed up 472 points or 1% at 47,207. Its first close above 47,000. The S&P 500 rose 53 points or 0.8% to 6,791, and the Nasdaq gained 263 points or 1.2% to 23,204. All three indexes hit record closing highs. For the week, the Dow rose 2.2%, the S&P 500 gained 1.9%, and the Nasdaq climbed 2.3%. Bank stocks performed well, with JP Morgan Chase, Wells Fargo, and Citigroup each up around 2%. Big tech was mixed. Nvidia rose 2.2%. Apple and Amazon both gained over 1%. Meta edged up less than 1%, while Tesla fell 3.4%. The U.S. National Highway Traffic Safety Administration said it is in contact with Tesla regarding its newly launched Max driver assistance mode, which reportedly operates at higher speeds than other versions of its autonomous driving system. Semiconductor firm AMD jumped over 7% on Friday following reports on progress in its quantum computing collaboration with IBM. A research paper set for release on Monday reportedly reveals that IBM has developed an algorithm that runs alongside quantum chips to address qubit errors in real time, implemented on an AMD manufactured field programmable gate array chip. IBM shares rose 4.3%. On earnings, Ford Motor beat expectations with shares soaring 12.2% to their highest level since July last year. Third quarter revenue rose 9% year on year to $50.5 billion US. Net income reached $2.4 billion, and earnings per share increased from $0.22 to $0.6. Despite the factory fire expected to cost up to $2 billion and a downward revision to full-year EBIT guidance, Ford announced plans to boost F-150 and Super Duty truck production by over 50,000 units in 2026. President Trump credited the company's success to his administration's import truck tariff policies. Procter and Gamble benefited from price increases, reporting first quarter net income of $4.75 billion US and adjusted earnings per share of $1.99, beating estimates of $1.9. Revenue grew 3% to $22.39 billion, above the expected $22.18 billion. The company reaffirmed its fiscal 2026 outlook, projecting sales growth of 1% to 5% and earnings per share between $6.83 and $7.09. It also lowered its annual tariff cost estimate from $800 million to about $400 million after tax, mainly due to Canada canceling retaliatory tariffs on U.S. goods. U.S. September CPI rose to an annual rate of 3%, the highest since January, and up from 2.9% in August, but below the expected 3.1%. Month-on-month CPI increased 0.3%, down from 0.4% in August, and below the forecast of 0.4%. Core inflation eased from 3.1% to 3% against expectations of holding at 3.1%. The S&P Global US Composite PMI rose from 53.9 in September to 54.8 in October, the highest since July, signaling accelerating growth slightly above the third quarter average. Output has now expanded for 33 consecutive months. Manufacturing PMI improved from 52 to 52.2, marking the ninth improvement in factory conditions over the past 10 months, with a slight dip in July. The Services Business Activity Index climbed from 54.2 to 55.2, recording the fastest expansion since July and the second strongest growth this year. The University of Michigan Consumer Sentiment Index for October was revised down from a preliminary 55 to 53.6, the lowest in 5 months. September was 55.1. One-year inflation expectations eased from 4.7% to 4.6%, in line with initial estimates, while five-year expectations were revised up from 3.7% to 3.9%, compared to 3.7% the prior month. China Mobile, China Telecom, and China Unicom have successively released their third quarter results for this year. In terms of revenue scale and growth, China Mobile leads by a wide margin, approximately equal to the sum of the other two, with Q3 operating revenue of 794.7 billion yuan, up 0.4% year on year. Of this, communication service revenue was 683.1 billion yuan, up 0.8%. China Telecom's Q3 revenue was 396.9 billion yuan, up 0.6%. China Unicom's Q3 operating revenue was 293 billion yuan, up 1%. Of this, service revenue was 261.6 billion yuan, up 1.1%, marking the highest growth rate among the three operators. In terms of new businesses, Unicom recorded Q3 cloud revenue of 15.3 billion yuan, up 26%. Total revenue for the first three quarters reached 52.9 billion yuan, with computing power business scale breaking through. Data center revenue was 21.4 billion yuan, up 8.9%, reflecting significant results from intelligent data center upgrades. China Mobile stated that the ICT business revenue maintained good growth in the first three quarters, with AI direct revenue achieving high-speed growth, though no specific figures were provided. China Telecom provided more data on emerging strategic businesses. IDC revenue for the first three quarters reached 27.5 billion yuan, up 9.1%. Security revenue reached 12.6 billion yuan, up 12.4%. Smart revenue grew 62.3%. Visual networking revenue grew 34.2%. Satellite communication revenue grew 23.5%, and quantum revenue grew 134.6%. On the profit front, China Unicom also took the lead with shareholders' attributable profit for the first three quarters at 20 billion yuan, up 5%, mainly benefiting from optimized cost control. China Telecom's shareholders' attributable profit increased 5% to 30.7 billion yuan. China Mobile's shareholders' attributable profit was 115.4 billion yuan, up 4%. In terms of capital expenditure, the three companies' total plan for 2025 is nearly 300 billion yuan, focusing on AI and computing power. China Mobile 151.2 billion yuan, down 7.8% year-on-year. China Telecom 83.6 billion yuan. Unicom is moderately ahead in cloud and digital intelligence investments. From an investment perspective, all three companies are high dividend defensive stocks with annualized dividend yields of about 5% to 7%. However, the third quarter results show that under slowing growth, new businesses such as AI, cloud, and 5G private networks have become key differentiating factors. China Mobile has strong scale advantages and ample cash flow, free cash flow exceeding 100 billion yuan, but lacks growth momentum. China Telecom is actively transforming with rising contributions from emerging strategic businesses, but revenue declines are dragging down its share price. Unicom leads in profit growth with explosive momentum in cloud business and plans to spin off and list its Zhiwang technology on the ChiNext board of the Shenzhen Stock Exchange, sparking market expectations of value unwinding. Suggested buy price 9.26 Hong Kong dollars, target $10.2, stop loss $8.86. I personally do not hold the above stocks.